Nike Incorporated Fiscal 2025 Third Quarter Earnings Call Summary. This summary provides a detailed overview of Nike Incorporated's Fiscal 2025 Third Quarter Earnings Call, focusing on key financial metrics, management's outlook, risks, highlights, and significant statements from the CEO and CFO. Overall sentiment: Nike's leadership expressed pride in the progress made against the Win Now strategic priorities, acknowledging that while expectations were met, overall results are not satisfactory. The company is committed to becoming better and is focused on leading with sport to drive impact. Key financial metrics: revenue, reported, down 9% year-over-year. Currency neutral, down 7% year-over-year. Nike Direct, down 10%. Nike Digital down 15%. Nike Stores down 2%. Wholesale, down 4%, primarily due to declines in Greater China. Gross margin declined 330 basis points to 41.5% on a reported basis. Reasons cited: higher markdowns on Nike Direct, higher wholesale discounts, inventory obsolescence, product costs, and channel mix headwinds. SG&A, selling, general, and administrative expenses down 8% on a reported basis, attributed to increased investments in brand and sports marketing being offset by declines in operating overhead. Effective tax rate, 5.9% compared to 16.5% in the prior year, largely due to a one-time tax benefit related to foreign currency. Earnings per share, EPS 54 cents. Management's forecasts and outlook: fourth quarter fiscal 2025. Revenue expected to be down in the mid-teens range at the low end. This includes unfavorable shipment timing in North America and foreign exchange headwinds. Gross margin expected to be down approximately 400 to 500 basis points, including the impact of restructuring charges from the prior year and newly implemented tariffs. SG&A dollars expected to be up low to mid-single digits. Other income and expense expected to be $45 million to $55 million. Tax rate for the full year expected to be in the mid-teens range. Fiscal year 2026 and beyond. Product portfolio transition, accelerating the shift towards performance dimensions, with a focus on newness across all fields of play. Classic footwear franchises expects these franchises to be down more than 10 percentage points as a percent of the total footwear mix by the end of fiscal 2025, and will continue to drive this mix lower in fiscal 2026, with the most aggressive actions on the Dunk. Nike Digital repositioning, reducing promotional days and markdown rates, shifting closeout liquidation to Nike factory stores. Expects digital traffic to be down double digits in fiscal 2026, with gradual stabilization and growth driven by new product launches and increased brand marketing. Marketplace cleanup, actions to clean up the marketplace, including tightening buys for Nike Digital, increasing markdowns at factory stores, and investing in wholesale partners to liquidate aged inventory. These actions are expected to continue through the first half of fiscal 2026. Return to growth. The combination of a steady flow of new product, improved brand engagement, a repositioned Nike Digital business, and a healthy marketplace is expected to lead to wholesale business returning to growth. Significant risk factors. Global economic uncertainty. The company acknowledges ongoing global economic uncertainties that could impact consumer confidence. Geopolitical dynamics. These continue to be a factor influencing the operating environment. New tariffs. The implementation of new tariffs on imports from China and Mexico is a known headwind. Volatile foreign exchange rates. Fluctuations in currency exchange rates can impact reported results. Tax regulations. Changes in tax regulations can affect the effective tax rate. Inventory management. While inventory declined 2% year-over-year, it remains elevated, and the company is actively managing the transition of classic franchises. Competitive landscape, particularly noted in Greater China, where competition is aggressive. Highlights: leading with sport, strong performance and brand impact when leading with sport, highlighted by successful activations during the Super Bowl and NBA All-Star Weekend. Product innovation, positive consumer response to new innovations in running, such as the Pegasus Premium and Vomero 18. Brand storytelling, effective use of storytelling and brand advantages during major sporting events. Wholesale partner engagement, rebuilding strong relationships and collaboration with wholesale partners. Team momentum, a renewed sense of identity and focus among Nike teammates, embracing an offensive and aggressive mindset. Apparel innovation, promising early results from the new 24/7 collection and the upcoming Nike Skims collaboration. Running category momentum, the running category showed strong performance, with ongoing innovation and expanded distribution. Lowlights, overall revenue decline. The company experienced a decline in overall revenue, indicating challenges in the current market. Weakness in sportswear and Jordan brand. These segments experienced declines, particularly impacted by the double-digit decrease in classic footwear franchises. Nike Direct performance. Significant declines in Nike Direct, especially Nike Digital, due to strategic repositioning and reduced promotions. Greater China performance. The Greater China region saw a substantial revenue decline due to market cleanup and promotional activity. Gross margin pressure. Significant decline in gross margin due to increased markdowns, discounts, and inventory obsolescence. Elevated inventory. Despite a slight reduction, inventory levels remain elevated, particularly with classic franchises. Impact of Win Now actions. While necessary for long-term health, these strategic shifts are creating near-term headwinds on revenue and gross margin. Most important statements from the CEO, Elliott Hill. When we lead with sport, we create impact for Nike. We told inspiring athlete stories, we brought more energy to sport's biggest moments, and we introduced performance product across an integrated marketplace. The last 90 days only reinforced my early assessment of the areas that are most important. We focused on two areas: strengthening our culture and committing to our top priorities. Our 5 priority actions we outlined on the call, with a sharp focus on 5 fields of play, 3 countries, and 5 cities. We call these strategic priorities Win Now. With Air Force 1, Dunk, and Air Jordan 1, it's about right-sizing, not sunsetting. Each franchise will always have a place in our stable of products. Our responsibility is to grow the overall market, and one of the most powerful ways we do that is through a relentless flow of coveted and innovative product through our powerful brands in both performance and sportswear for men, women, and kids across footwear, apparel, and accessories, and up and down price points. Nike Incorporated is a sports company. We inspire through iconic brands and create innovative products for all athletes. Success for Nike has never been about protecting our turf. We force others to play our game. We drive trends, grow markets we lead. Most important statements from the CFO, Matt Friend. Our third quarter financial results reflect the headwinds from the Win Now actions we identified for you last quarter. Gross margins declined 330 basis points to 41.5% on a reported basis, due to higher markdowns on Nike Direct, higher wholesale discounts, inventory obsolescence, product costs, and channel mix headwinds. For the last quarter of this fiscal year, we expect our classic footwear franchises will be down by more than 10 points as a percent of our total footwear mix. We intend to drive this mix lower in fiscal year 2026, with total units planned down double digits, with the most aggressive actions on the Dunk. The fourth quarter will reflect the largest impact from our Win Now actions, and that the headwinds to revenue and gross margin will begin to moderate from there. We expect Q4 revenues to be down in the mid-teens range, albeit at the low end. We expect Q4 gross margins to be down approximately 400 basis points to 500 basis points, including restructuring charges during the same period last year. We are focused on what we can control. And for Nike at this moment, serving athletes with new product innovation and reigniting brand momentum is what matters most.